back. Hope you guys all having a good weekend. SPY, SPX, S&P 500 technicals to watch from here. So on Friday, Black Friday, 2.2% down day, and we closed on SPY. We're looking at SPY chart right now, 459 basically. That's where we closed. So let's have a look. We did discuss with you guys that I'm watching this support level right here, and to the upside this resistance level up here, 471-ish, and we slipped below this support. Now let's bring up moving averages. So I don't overcomplicate my charts, even though you may be seeing a lot of things here. Well, I keep it simple. I don't look at trend lines. My trend lines are the moving averages. Basically, on my screen you see 3-4 lines right here. 200-day moving average, this red line. Purple is 100-day. Yellow line is a 50-day, very commonly used moving averages, and this blue line right here is a 20-day moving average. So now, well, since the market is above 50-day moving average and it's uptrending and it's moving higher year to date, it's up. This moving average is also uptrending. Well, I would expect this level to act as a support. So that's the support I'm looking at. So I'm not going in to buy this 458 at this point. So we also looked at MACD that I shared with you guys, saying that, hey, even though market is trying to push higher and trying to stay up there, well, look what it has done for the past 3 weeks or so, 2 weeks or so. Well, it has been moving sideways, and you saw well before this drop, you saw this negative there, basically a bearish crossover on a MACD, which was indicating that momentum is to the downside. It's not to the upside, even though price is up there. And a lot of people might say, hey, it's China, it's COVID new variant. I don't look at these things. I don't care what kind of news is out there. All right, I want to be in a position where I am ahead of all those things, because market knows things well before you do, and it gives you a signal well before things happen. All right, so look at the volume. Another thing I shared was volume. So, and Friday was a half a day actually. All right, we closed early, but even then, volume for SPY was significantly higher than the average. So, average volume, where you can say, all right, I'm staying on sidelines, or I'm bullish. Well, whenever volume is low, below 60 million, well, you can play it to the upside, slow melt up. But whenever volatility increases, well, you have more probability of being contrary and try to bet to the downside and try to hedge your positions and make money to the downside. All right, so another thing was indication. So someone was asking me, it's a SPX put to call ratio, and this put to call ratio comes out. So if you guys are not familiar, S&P 500, so the futures market trades 23 hours a day. So it has only 1 hour break from 4 p.m. I believe till 5 p.m. Western time. So, and after that, you're gonna see these numbers released. What was the put to call ratio for that day? And whenever it's above 2, well, that means there were more put buyers. You can see it on a graph as well. So anytime you see these spikes, that means more people were buying protection at certain levels. And I can bring up the chart where I manually put these blue candles on top of the S&P, pretty much SPX's Immunity Futures Index. I have a visual representation of what happened in the past when people were heavily buying puts. What happened? Well, it dropped. People were buying puts, it dropped. Right here, well, people may be wrong. Right here, people were buying, well, we got a little bit of a pullback. And now it's not as heavily put buying, but we saw this 2 days of a unusual put buying spike. Well, I did trade this move right here from 4 4,700 all the way till 4,600. I shorted it, I made money, I got out, and then on Friday we saw another spike, and well, market was down significantly. So what else do I use? Well, I keep an eye on, well, you can guys save this one as well. It's called slickcharts.com, where you can come take a look at the historic returns. So this year so far, S&P 500, 23%, 24%, give or take, 24% up, all right? And you can come here, look at the historical return. Well, last 3 years, you can see here, well, 2019, 31.5%, 2020, 18.5%, 2021, 23% up. So, and if you go back, well, the only time it happened, it was early 2000, actually not late 90s. So we're pretty much 5 years in a row, S&P 500 was returning more than 20. And then 3 years in a row, it was negative. So that may be a sign for you, but this may be a little bit macro, maybe going forward to 2022. Well, maybe you might expect another 20%, another 20, but probability is very low that it's going to return more than this year. And this year is not over yet, but just keep that in mind, all right? So you are having really, the market is having the best years in the last 2 decades. So basically 2019, 2020, 2021. And it's not going to keep going like this. There's a lot of money out there. But okay, I don't want to go there too much, but let's have a look at other things. You can see SPX. What else you can look here? There's a lot of things you can look at. You can look at the component performance, basically pull up all 500 plus stocks that are in S&P 500, and you can just scroll. What is the year-to-date return on individual stock? Let's say you want to buy NVIDIA. Well, you're buying one of the best, like top 3 best performing stock at its all-time highs. And same thing with Ford, all right? A lot of people look at Ford, oh, it's cheap, it's $20. Well, it's top 5 biggest gainers in S&P 500 year to date. So know what you're, but if you scroll down, you're gonna see, well, how many stocks are carrying the market? Well, you can see right there that only S&P 500 is up 20+%, right? Well, you can scroll down and you can see, well, half of the S&P 500 is only 250 plus 260 to be exact. 260 stocks out of 500 have gained 20+% year to date. The rest are down, or they have only gained less than 20%, or maybe even negative. So maybe useful to somebody who likes to use top to bottom approach or bottom to top. Like you can look at the stocks that are beaten down, like Global Payments 42% down year to date, Penn National 40%. I mean, if you like these kind of stocks, maybe you should look at these names instead of trying to chase those names that are up there. But again, I'm not saying like what approach you should use, but just go through these names that are beaten down and just go look at the stocks that are up there and why it's happening. So maybe it's a good web to use. You can also take a look at the, weight components. Well, 50% of total S&P 500 weight comes to only to 50 companies. So 50 companies represent 55% of S&P 500, even though there's 500 plus companies. So, well, take a look at this. This is another thing I keep an eye. You can take a look at the NASDAQ historic returns and what's going on there lately and what it has done after producing so much gains, what happened the next year and the next year. Because if you don't pay attention to news and just play the probabilities and you look at the numbers, I mean, you will do much better. Much better. You will be calm emotionally, and yeah, all that good stuff. I don't want to go to that rat talk pretty much. I don't want to cover that. I don't want to go that too far because I don't want to make this video too long. So also for SPY during a day, this is what I watch. I keep an eye on S&P 500. Well, what's the volume coming in so far? Stats. So I can see here that total volume, even though it was half a day, 2.4 million calls were traded, 3.9 million puts traded. That means there were more people buying insurance or betting to the downside on Friday. A lot of people thought maybe it's going to be a quiet day, but well, unfortunately it was not. And also, if you want to have a visual representation of what people are pretty much buying, exactly what time, what puts they're buying, what calls, you can keep an eye during market hours at these stats. And also you can go to Market Watch and keep an eye on like what sectors are down and what stocks are positive when everything is down. So that's the S&P 500 heat map, and that's Russell 2000, that's NASDAQ 100, Dow. So these are the tools I use. I don't overcomplicate. All right, just like I said, like from here, basically my conclusion is that it can go lower before bouncing. Even if it bounces here slightly, well, I do expect some sellers to come in and knock it down to 50-day moving average. So very basic. I don't use like too many lines, too many indicators, because it will confuse you if you keep relying on too many stuff, because you will be afraid to take a trade. So yeah, that's it. I will see you in the next one. Take care. Peace.